Good morning, everyone. And I think people will join in the next few more minutes as well. Good to see you all. My name is Wolfgang. I'm from European Center for Social Finance, and I'm moderating the session today. And it's my big pleasure to have Florian Ott from Erste Bank and José Moncada from Börse Social here with us today. And before we start our discussions, let us do a quick poll. Marcin, could you be so kind and share the polls with our participants? And we have 3 polls, so just to get a better understanding, like about your background, what you're most interested in. And then we can continue. So the first question is like, if you think about, so our topic today is about funding instruments. And if you think about like what kind of financing instruments are most effective for funding social enterprises, please indicate so. So we have grants, so basic philanthropy. We have loans. We have equity and quasi-equity investments, so basically investments into a company, and all other more hybrid forms such as repayable funding, for example, revenue share agreements. So we have only like 3 people so far participating in a poll. Please say, yeah, now people are joining. So please indicate your preferences. And I have to say it's interesting. So most of you prefer grants as a funding instrument, with 75% going for grants and 50% for loans, and only 1 out of 8 in our poll here for equity and quasi-equity. Interesting. Can we go to the next poll, please? The first poll is leading towards a preference for grants. Let's take a look at the second one. The second question is like, who is the financing institution you like the most? Or who do you think, not who you like the most, but who is the most adequate for social enterprises? So here we have banks, we have investment funds, we have other non-bank financial institutions such as microfinance institutions, we have crowdfunding platforms, we have philanthropy, or you could also say none of the above. So please let us know what you prefer. So we have, again, like a lead for philanthropy. Jose will like it that 60% prefer crowdfunding platforms. Only 1 out of 7 says banks are the most adequate funding source for social enterprises. And I think Florian needs to make the case why in our presentation today, why banks might be still a good option for social enterprises. Okay, but interesting. So we have a preference for MFIs, crowdfunding platforms, and philanthropy, with only a few being interested in banks and as well for investment funds. Marcin, can we go please to the third poll? Can I ask you, Florian? So our plan today is we have 2 presentations. So Florian and Jose will each present what they're doing so that you get a better understanding. Feel free to ask questions in between. So just put them in the chat. It would be nice if you can also indicate where you're coming from, the name of your institution, if you want. You can also just put in the questions. So we are flexible in this way. After the 2 presentations, we will have like 3 rounds of discussions. We will talk about the regional differences. So we talk about what we see in Spain and what we see in the CE region. We talk about we try to make the case why you should go to a bank or why you should go to a crowdfunding platform. And we talk about the business models we see at the end. And then at the end, we try to have like at least 15 minutes for your sessions. Okay, here we have the third poll. Can you please say if you think that MFIs, microfinance institutions, are a good funding source for social enterprises? We see a majority for yes. So 3 out of 6 say yes, MFIs are a good funding source. And maybe Florian can also talk about the MFIs, because Erste Bank also has like a large MFI segment unit. How you see the MFIs as being a part for the funding of social enterprises. Okay, so interesting. So it's a good way to get to know you better. And it seems that you have a preference for philanthropy and grants. I have a preference for crowdfunding and foundations as a funding source. And let me now hand over to Florian. And you can also introduce yourself, and please try to finish your presentation in the next 5 to 10 minutes. So
thank you, Wolfgang. And thanks for having me and having the opportunity to withstand also and present why we think that banks indeed are, I think, one of multiple players on the market which are needed to support the social economy, social enterprises, and help social business to grow. Yeah, just a few words about myself. So I'm working in Erste Group on group social banking. So our responsibility is support and coordinate the activities in our subsidiary entities throughout Central and Eastern Europe and help them to develop some local specific solutions in order to address the needs on the specific markets and help at the end of the day hopefully organizations like today joining also this call in order to acquire needed funding and financing in one or the other way. Now I will try to go the most challenging step and try to figure out how to share my screen. A few words about Erste Group and why we are even doing this specific activity in terms of social banking. Overall, we are present in 7 core markets in Central and Eastern Europe, where we roughly have overall clients of 60 million that we are serving. And surprisingly, seeing the region where we're in and the countries, this is roughly representing the number of people which are facing marginalization and the risk of poverty. And I think this is a bit what our overarching ambition is, not to obviously be capable of solving this problem on our own, but try to support in developing an infrastructure and the joining forces in order to address severe challenges that we have in our time in terms of housing, healthcare, education, or even helping people to re-enter the job market, reducing barriers for marginalized people, people with disabilities, and so on. And this is like the market where we are in these countries and in these subsidiary entities. We have dedicated social banking units as part of the bank, which are designed and defined in order to really work together with particular social enterprises and NGO partners in order to help to set up a financial framework and financial solutions here. As Wolfgang mentioned, we also have one microfinance institute as a non-banking FI in our group, which is placed in Romania, BCR Social Finance, which is especially having the advantage of being a bit more flexible because it's not really restricted from the banking regulation aspects. So what do we do in social banking? In particular, we have like 4 main key segments that we are addressing. First thing is we are also trying to support job creation in that area, that we are also supporting financing of greenfield businesses, starting entrepreneurs from day 0. We also have here special programs for micro businesses which are not covered by regular banking financing. So especially here I would refer to this Microfinance Institute in Romania, where we are, among others, also financing rural areas, agriculture activities, small urban businesses, which are usually excluded from bank financing in one or the other way. At the very right-hand side, we are also supporting with different programs, people in financial difficulties, from over-in-debt up to people with no permanent residence, where we have multiple housing programs, housing first initiatives, Roma housing programs, where we are financing people in really building their own houses with NGO partners from scratch. We have education, financing, and learning. And last but not least, this is the main focus of today. We are also having setups, programs, and financial instruments to support social organizations. So when we talk about social organizations, we mean both like traditional NGO partners and NGO clients, which are still very present, at least in our markets, but also like for-profit, impact-oriented social entrepreneurs. Overall, we're seeing quite a lot of similarities, but also differences, but also some structures where, for instance, an NGO was initiator of the setup of a social enterprise. And what do we do? Primarily, we try to use and reuse existing standard bank financing instruments, from working capital facilities, regular account services, but in particular investment loans and bridge financing, which we see as the most relevant ones, also to help organizations to grow and reach the next scale. But also like the aspect of bridge financing, I think is something where I believe it's a very essential one, and it goes a bit together with the first poll, addressing the aspect of grants, because grants itself are very important, but also you must find a way to utilize them. One more thing I would like to point out, we always try to combine our financial instruments also with non-financial support, where we have different programs for helping starting enterprises to develop their business plan, business training, up to very individualized programs for more advanced social businesses and organizations in order to help them to scale and grow. What we have achieved over the years so far is that we have supported within the social banking frame around about more than 47,000 clients, and financed nowadays more than 600 million in total loans that were provided. So this is, I think, especially seeing our region quite a lot in order to really support this segment. And it's not only about providing financing, but we're also keen to understand what was the impact and the results of what we have provided. So every 2 years, we also perform impact assessment, where we do client surveys with more than 1,000 clients in order to understand, did the financing help them to perceive their mission? Did it help them to really improve their economic situation? And also, could we support them in perceive or create new jobs in the markets where they're operating? So that's a bit on the general activities. Now, a few words about our financing for social organizations, so social enterprises and NGOs and other sorts of social projects that we try to support. What we see that there is a very deep understanding, of course, of their social missions and their general activities. But what we also see that sometimes the additional burden dealing with their financial is a key challenge for them. Coming from the nature of the business, that of course a non-profit is usually not very good in generating big profits that help them to survive also more challenging times. So what we try to set up and support really to use different instruments to achieve a more financial independence and help them to focus on primary impact targets. So one thing I would like to point out here, which is among them different instruments that we are using, is like especially this bridge financing and pre-financing. One key aspect, especially in our region, is there's a strong dependence on grants and subsidy schemes. And here there's often the case that an organization have a commitment for funding, but they're not really capable of managing the pre-financing. So that's a very typical element where you can see the combination of bank financing can make a lot of sense, even in order to benefit from available grants, which are definitely needed. And I would agree that's probably one of the most important initial steps for an organization to grow. As mentioned, next to financing, we also do non-financial programs. So we have this year started a new group-wide initiative called MARC, together with other partner organizations, which is very much aimed in order to support different levels of organizational development, from ground root movements like the first setup of a new social business up to the scaling, even cross-border activities that we are seeing more and more the case and also needed in the market. So we have here very individualized programs where social organizations can apply for, and then we try to structure the right development path for them, getting experts in there, getting network sessions and so on, in order to really help them at the end of the day to really reach a bigger impact. Because I think that's our luxury in the situation, that our aim is really to support organizations increasing their impact rather than the strict limitations to financial targets. So we have the aim to cover our costs, but also we have the aim to support the development of impact-oriented organizations in our region. As mentioned, we do this impact assessment. So here you can see especially what we have done with these social organizations, NGOs, and social enterprises in terms of funding. So overall, we have covered more than 1,200 organizations that we financed and supported, and also in terms of really helping them to manage economic, environmental challenges and also helping them to increase the impact. I think we were so far quite satisfied with this outcome. As a last slide and a summary, it's always, I think, good to give you some indication what we are talking and to have at least some like two faces here shown. That's a very nice social business working as a work integration social enterprise in Austria, which is a quite uncommon thing because most of these integration companies are either active via labor union driven or other stakeholder or semi-public sector oriented organization, and they are really developed independently, but also facing the challenges of being very independent. And here we have really combined multiple instruments, especially we have also an own support instrument in form of a quasi-equity subordinated loan structure to help even more challenged businesses in order to give them some increased equity, which is also then allowing to take more debt. And what they did with this financing is building up a new factory and office building in order to really keep their growing business available, that they can serve more people, helping with more work integration. And at the end of the day, which was for me the most surprising thing, with this financing, they were really capable within 8 months to build a new office place and a new factory hall, which was really hardly needed because the second day after they started with the construction of the new building, the old rented building burned down. So I think without this structuring, I would say today this organization wouldn't exist. And I think it's one of the nice stories where you can see also how a joint forces can really make a bigger difference. Okay. Thank you. That's from my side. I just now need to figure out.
Thank you. Thank you. Thank you, Florian. We will cut the 2 minutes from your remaining speaking time.
Thank you.
But it was very interesting. And I think we will have many follow-up questions on what you're doing, especially on this new market program, which is somehow unique. Jose, tell us more about what Bolsa Social is doing and what...
With pleasure. With pleasure. Let me share with you a presentation that I have about Bolsa Social. So please let me know if you can see it, the screen. Can you see it? Fantastic. So thank you very much for the invitation to be here with you. I'm very happy to share the stage with Glaucan and Florian. Super interesting, Florian, what you are doing there in the east of Europe. I think is super interesting and very complete, I would say, very complete. So very inspiring. Thank you very much. So I'm Jose Moncada. I'm founder and CEO of Bolsa Social. And I'm going to explain to you what is Bolsa Social and what do we do in terms of participative finance. Bolsa Social is two things. There is, on one hand, an impact investing platform based in Madrid, doing impact investing for startups and for social economy entities. And there is a fund, Bolsa Social Fund, which is a separated entity and independent from Bolsa Social, that is a venture capital impact fund that is based also in Madrid, and I launched it together with AFI, Analistas Financieros Internacionales. Okay, so let's go step by step. Let's start with Bolsa Social. So Bolsa Social started 10 years ago as a community of people that wanted to connect social enterprises in early stages, so innovation and impact together, with investors that were looking for investing in this type of companies that have growth potential, a good business model, good team behind, but also a clear mission to produce positive impact in society or environment, because they are contributing to solutions for the main challenges that we have in terms of social and environmental challenges. So we started as an equity crowdfunding platform in Spain. So that was the mission, to create a space, a forum where investors can meet impact startups. We started like that in 2015. Since the beginning, we started as a regulated entity. We are regulated by the CNMV, Comisión Nacional del Mercado de Valores. This is our national securities markets supervisor. And what we do is we select companies at early stage. At least is what we are doing since 2015. Companies at early stage with a clear mission to produce positive impact, where we can see potential growth potential. So potential of getting a profit for the investors. And once we have selected it after the analysis, we publish it in our website. And there, any person can see the information about the company and invest directly in the capital of the startup and become a shareholder of the startup. So it's like a public offer, if I may say, but for a startup. So there's a round of between 100,000 and 500,000 is the average round that we do that we run in the platform. And then the investor can invest as from 1,000 euros and become shareholder of the company. Meanwhile, for a period of 2 months, is open the offer in the platform. If we do not achieve the minimum financing goal for the company, then the money is given back to investors, and there's no deal. Whereas if we achieve the minimum goal or we trespass it by the investment of the people, then we convene the capital increase of the company, and the investors become shareholders. So this is the purpose of Bolsa Social: create an impact investing ecosystem that encompasses not only social enterprises, but also retail investors and also professional investors. So we are members of Impact Europe, the European Pan-European Alliance of Impact Investing. Spain now, which is the National Spanish Association for Impact Investing. In our shareholders, we have very relevant impact funds like Triodos Investment Management via Triodos Regenerative Money Center, Impulse, which is a Belgian asset manager of managing impact funds, and 3XP Global, which is a Portuguese impact fund manager. As I said, we are regulated by the CNMV, and we are registered at the ESMA, which is the European Securities and Markets Authorities register. And this is the problems that we have found in our market and the way we try to contribute to solve them as a social enterprise that we are. So we see that clearly in innovation, companies that are in early stage, they have difficulties in finding investors that can understand them and support them and be patient with them and help them to grow. Often in these early stage phases, banks cannot get in because of the huge risk that involve these investments. And conventional investors, even venture capital funds, often do not want to join this, or do not want to enter this landscape. Moreover, if we are talking about impact companies, where it's not evident the risk and return equilibrium of the investment proposal. Also, what we saw is that retail investors did not have the chance to invest in these companies, because the only way you could invest in these companies was through funds, where the minimum investment, at least in Spain, venture capital funds, the minimum investment is 100,000 euros, which is not everybody has that in the pocket. And there was a lack of transparency and impact measurement. So that's why we created this impact investing ecosystem, where we connect social enterprises with investors through the platform. In 2020, we opened up the investment possibilities of Bolsa Social, and we extended it to loans. So through Bolsa Social, investors can invest in social enterprises that are startups through equity, and social economy entities that could not accept equity legally. You cannot invest in equity in a social entity in Spain, social economy entity in Spain, or social enterprises that are bigger enough so that they can be financed by loans. And since then we have launched a new line of investment, which is the crowd lending. So people can invest directly in loans for social economy entities, social enterprises. Yeah, so and in these 10 years, we have financed 50 companies, 40 in equity, 10 in loans, with different areas that we have covered: social inclusion in terms of special employment centers, residences for people with disabilities, startups with technology and innovation for people with disabilities, for improving the care of the elder at home. Also, companies of sustainable fashion, sustainable mobility, sustainable cities, and education, and so on, ecological agriculture, and circular economy. So, voila, many areas. So in terms of impact, of course, we measure the impact. We help the companies develop their own theory of change and the impact and measurement and management framework. And the companies that we have invested in have helped, have had more than 140,000 beneficiaries, have created more than 100 jobs for vulnerable collectivities or groups, saved or avoided more than 30,000 tons of CO2, and saved several tons of water. That is in terms of impact. In terms of financial return, we're very happy to see that the equity part, which is the riskier part, in terms of financing investing in the startups, there has been already exits, profitable exits for the investors of Bolsa Social, and in general, valuing our portfolio, taking into account the write-offs, the companies that are still in the portfolio, and those that have exited already from Bolsa Social, there is a return of 1.6 money on invested cash multiple, which I think that for impact investing is quite decent. An important thing is to see that these companies have helped to create such impact. Also, in terms of lending, all the loans that we have given or granted are performing very well, with zero default, and they have provided an interest rate average of 6.32 to the investors of Bolsa Social. Well, as I said, we help companies in Bolsa Social develop their own theory of change and measure the impact that they produce in terms of people impacted, lives changed, and also CO2 emissions avoided, and so on and so forth. I'm not going to go into the detail because we're running a little bit behind the schedule, but let me finish that with a reference to Fondo Bolsa Social, which is an impact investing fund separated from Bolsa Social. They share the name, they share the mission, they share the spirit, but they are separated entities, independent entities. And this fund is created by myself and AFI, Analistas Financieros Internacionales, here in Madrid, and is invested in companies in Spain and in startups in Spain in the areas of health and well-being, education, responsible production and consumption, climate action, and social development and integration. So far, we have invested in 18 companies. So this 22 million euros fund is almost closing the investment period, and will now start a divestment period. And there you can find companies mainly based in Spain, which is our main geographic area, in the areas that I mentioned before. Since I'm running 40 seconds beyond the schedule, and I know that Wolfgang is a German and is very strict with time, I will stop here and thank you very much and open for your questions.
Yeah, thank you, Jose. I appreciate your timeliness. We have one question from Annie. I can give Annie you can speak. Well, Annie, if you can put the question in the chat. Okay, Annie had a question, but please put it into the chat if you want. So maybe let us go through the 3 rounds of questions and then having an open discussion at the end. So my first question would be, so you are active in Spain and Florian in the CE region, which is Romania, Hungary, Czech, Slovak, Austria, Croatia. Maybe, Jose, let me start with you. So what are your, how would you say, if someone is not Spanish, how would you describe the Spanish ecosystem? And I know that you know many other the European impact field quite well. How would you describe the Spanish ecosystem for impact investment, social finance in general?
some words about the Iberian market. We have been here for already 10 years doing impact investing. So we have seen a big evolution in these last 10 years. Maybe 10 years ago, talking about impact investing and social finance, where you were looked as if you were a crypto communist trying to destroy the capitalism or something like that, or the opposite side. You could see as a crypto capitalist trying to privatize the social economy sector. So we the Spanish, we like things to be white or black. There's no gray. So, well, this, of course, jokes apart, this has evolved, and we have seen an important evolution. Probably when we started in the Spanish market, we saw that the actors active in the social finance landscape were the traditional saving banks. So that these were Spain had a big sector of saving banks, but unfortunately they collapsed significantly during the financial crisis of 2009. So we still have the rural saving banks which are credit cooperatives, still active in the social finance landscape. And also together with them, we had very active ethical banks like Triodos Bank or Fiare, or other COP57 and some other entities providing finance, loans to the social economy. Let me give you some data about Triodos Bank, for instance, so that you can have an idea of what we are talking about. In 2022, Triodos Bank provided loans for 1.8 billion euros in 15,000 loans, of which 30% were going to the social sector, meaning the elder, protection of the childhood, disability, social housing. And then 40% were going to environmental projects like renewable energy, ecological agriculture, sustainable housing, 14% to ecological housing, and 30% to culture like education and cinema. So these figures are quite relevant of what was the market. This very significant actor, which was Triodos Bank in Spain, together, as I say, with the saving banks and the rural banks. In parallel, there has been a big development of the impact investing landscape. And to provide you with figures of 2022, which is the last report that we have from Spain now, which is the National Association for Impact Investing, leaving aside the financial impact finance, so which mainly is Triodos, Fiare, and COP57 and some other small entities. In terms of impact investing, so funds, foundations, and platforms or family offices, in 2022, there were 1.2 billion euros invested or assets under management in terms of these funds, foundations, and platforms, and so on, of which mainly the funds were the main bulk of that, which is 870 million euros. Then the foundations with 240, and the rest with 95 million. This 1.2 billion euros is a significant increase vis-a-vis the previous year, 2021, where there has an increase of 58%. In 2021, there was 764 million euros, whereas in 2022, we closed the year with 1.2 billion, which is a significant development of the market. And probably to conclude with some elements to give you more vision of the landscape, the Spanish landscape. Also the Spain NAV, the National Association for Impact Investment, has played a significant role in helping develop the market. We have seen new actors coming into the impact investment ecosystem. And through Spain now, we have tried to ensure the integrity of the mere concept of impact investing, because there's a lot of confusion between impact investing and sustainable investment, and some practices of what we could call impact washing. So we were trying to protect the integrity of the impact investing ecosystem, and that's why we developed a definition of what we consider to be impact investing that was widely negotiated and discussed with the sector, the financial sector in Spain, and published in a paper in 2022. And lately, just 1 month ago, we published a code of good conduct for impact investors. So if you're saying that you are an impact investment fund manager, you should comply with certain elements of what it means to do impact investing, meaning the intentionality, the measurement of the impact, and the additionality that you are bringing by investing in additional companies that want to contribute to solutions to the challenges, social and environmental challenges that we are facing, and the additionality of the investors. What are you doing in terms of additionality? And to finish, we have now a big opportunity in front of us in terms of the market, the impact investing market in Spain, which is the launch of 400 million euros fund by the government that is called the Fondo de Impacto Social, FIS, so Social Impact Fund, which is going to be invested in the national ecosystem to impact companies through the ecosystem. So I'm sure this is going to create a big momentum for the whole ecosystem in Spain.
Which is a lot of money for
It's a lot of money.
social impact fund. Good
It's
luck.
never sufficient, but it's a lot of money.
Good luck with the and that was interesting. Like if you don't live in Spain, it's hard to follow like everything what is happening. But good to get an insight. Florian, you're a bit unlucky because you have 7 countries and they are much smaller. So, for example, you have countries with like 2 million or 5, 6 million. So you have like 7, 8 different countries or different languages. How do you do that? And how do you work across the countries? And how would you describe your region to people who are not living there?
Mhm. Thanks
Or the
for
challenge you're facing as an investor working across the field.
Sure. Yeah, and thanks also to Jose for getting this overview about the activities and development stage on the Spanish market, which I think is quite fascinating. And I would like to start with the second part of your question, describing a bit like the difference in maturity level. And I was just looking up a bit this new benchmark study on the social economy right before our call, because I have to admit also I know quite a little about the Spanish market, but to give you some flavor, I was just comparing and I'm looking up the data right next to me, just taking the example of comparing Romania with Spain in terms of market and market development of the social economy, just to get some figures. So in terms of population, Spain is like 2.5 times bigger than Romania. Both are relatively big markets, but of course, Romania is still smaller. In terms of organizations active in the social economy, there are roughly not even 3.5 times more. So there are not so much difference in terms of the number of organizations being present, considering the different size. But now I think the interesting aspect is coming in terms of people being employed in the social economy. Here we're talking about roughly 100,000 in Romania versus 1.4 million in Spain. So it's like almost 14 times. And in terms of turnover, we are talking about 1 to 2 billion versus 107 billion. So it's almost 100 times bigger in terms of turnover. So I think that gives you some indication about the level of and the maturity level of these different markets. And I was saying beforehand a bit to Jose, I'm of course a little jealous of the market development. Of course, there are good reasons for this. I think it's now the question how we can take this momentum and replicate it. And you were saying that the challenge, I think, is coming from one side, that it's still a quite fragmented market. So we are dealing with 7 different countries with different maturity levels. Some have a more robust and longer legacy in terms of development of the social economy. Some also have stronger state subsidy schemes and institutions that supporting it. Because what we are seeing, of course, is also like one main driver is really the investments that going into the social economy. If it goes then to an NGO or a social business or other impact-oriented organization, might be not so important, but more the fact that there is some room for growth. So we see a stronger dependence even on EU grants rather than local support programs in our region. And this is also where we try to step in, seeing that we have more early stage rather than late stage organizations, and try to help them to grow and even develop on a cross-country level, which is indeed a challenge, because we're not only dealing with different languages, also even between Czech and Slovak, there's a different language, but it's mostly like different regulatory and legal frameworks, which are really stopping really the stronger and faster growth. And I think this is what we would love to see a bit more cross-country momentum, even also having, for instance, organizations from Spain entering Central and Eastern Europe and bringing their experience in, because I think there is still quite a good demand, and I think the need to grow and support. And I think this is really where we are coming in, of course, knowing that we are a bit in a luxury situation as being not only a bank, but also our biggest single shareholder. The Erste Foundation is a philanthropic foundation, which can help us also to go, I would say, a few steps further than a traditional banking group can go. And when it comes to supporting, for instance, this needed non-financial support or capacity building programs, I think this is also quite helpful to step in, like I mentioned, this Mark diagram before. Since I think I was already taking too much time for my presentation, as Wolfgang mentioned, I would stop at that point and
Yeah.
give over to you.
Okay, let's do the let me stay with you, Florian. So at the beginning, people said in the poll, like only one out of the eight who participated in the call said banks are an interesting or appropriate way to fund social enterprises, which is low. Maybe it's not very representative, fine. But what would you say, why are banks still an appropriate way for the funding of social enterprises?
Yeah, I have to say I was also a little surprised, but I think it really depends on also on which markets you are and also what is possible. Because what we see, although we're talking always about a single market, in the EU we are far off, and it's a very fragmented market where different solutions are possible. And I wouldn't say it's either or, because I think for the most successful ventures we're supporting, they are not depending on one or the other partner. They are combining bank financing with VC providers, with crowdfunding, with other equity sources, with philanthropic money, and also grant programs they're getting on local and EU level. So I think it's really combining and having here some possibility of catalytic financing. So I would say it really depends a bit on the development stage. I understand José's remark that to say, okay, at a very early stage for most banks, it's indeed challenging to step in as a finance provider, because there's one big difference which I see between equity providers, funds in traditional way, and banks, that when we are financing clients, we must really ensure that this client is capable of repaying that loan. But we cannot really benefit from any potential upside in regular terms. So if they are being the next, I don't know, Tesla, unfortunately, we cannot really participate with this. But we have to cover, I think, the risk under control. And I would say also without EU support instruments like this guarantee programs, it would be in particular hard for banks to step into this market to cover this probably additional risk. On the other hand, it also means it's more flexibility for the ventures because we are not an equity provider. We do not really control and interfere in their management, and we also don't really have shares in the organization. So it's a very independent way of financing. It gives some flexibility. Of course, there must be a clear path on in terms of repaying the debt, but then there's nothing additional in. And especially when we're thinking about the more traditional NGO sector, equity, I think José mentioned this before as well, is not really an option because you cannot really get a share in an association. So I think for them, debt financing is, as it looks like, the only option. But anyway, I'm encouraging really to think about combining different instruments. And I think simply thinking about challenges like working capital facilities, that's probably the first starting point, and it's also the most and easiest way to use it. So I think in that way, it makes a lot of sense. I understand it really depends on the partners and the market, what is even there. Taking now the example of Romania, here we have for good reason also the separate non-banking financial institution, because it even provides some more flexibility to address client segments where, for instance, a certain banking regulation would hinder us to support them. So I think that's also keep in mind. But I think if there's a possibility on the market to find a willing partner, and there are a lot of ethical banks, I think, throughout Europe, which are there and supporting, I think it's good to approach it. And yeah, at the end of the day, I think the ventures should always not thinking about either or, but try to combine the best of all worlds.
Okay, thank you, Jose. Maybe the question for you would be on the, there's one thing I like about your business model is that you are you have the strongest link between capital owner and investment. So it's you have direct link between who is giving you the money and where it goes. And you also have strong information flows between them. And I think in a way, the sustainable finance package is also replicating in a way what you're doing, in a way that you have better information with CSRD and SFDR between capital owner and investment opportunities. Would you agree that you are you have the closest, that your business model has the closest link between investment and capital? Would it be something what you see as a key strength of your business model? And maybe you can also answer Hanno's question about how you work with your companies on measuring and managing the impact.
The beauty of the participative financing platforms is precisely the transparency, the democratic participation of the investors directly in the companies that they want to finance. And this is, I must say, that the most beautiful part of Bolsa Social. Obviously, this has some challenges as well. How do you manage this? How do you make this efficient over time and so on? And requires a lot of education and proactivity from both sides, from the company and from the investors. But thanks to the technology, we can do so. It's basic technology. Platform is not rocket science. So there is the nice connection between investors and the companies. Of course, there's limitations in terms of what the companies can do in terms of transparency, because they're startups, so they are very early stage companies. They don't have an investor relations department to provide information and so on. But it's working very nicely. What we have seen is that it's working very nicely in both sides. The company that has the investors directly in the shareholding, which proactively informs their investors. Then when it comes to hard times, investors are there to support rather than to demand or to require solutions, but to support for solutions, because they're there to help. But then there is as I say, the bad side of it is that it's a bit complicated then to manage, at least from a legal point of view, to manage such number of investors. And then that's why we have created syndication structures. But it's beautiful to see this direct participation. And probably linked to this question, I can go to Johan's question about how do we help companies to measure and manage the impact, or investees, no? So basically, the way we support investees to assess and manage their impact first is to help them understand their impact. So we do this by helping them develop their own theory of change, which is a key element of impact investing. So what is the problem, social environmental problem that you are trying to address? What solution do you bring in? Who are the beneficiaries? And how can we measure whether this is having success in terms of social impact? So let's sit down to agree on indicators, simple to measure but meaningful of the impact. And then we project the objectives, yearly objectives for these indicators, and they measure and they report them through the platform to the investors, so that investors have clear and transparent access to the information about the impact, not only the evolution of the company, but also the impact. Now, this requires, of course, discipline from the companies, but those being transparent are having the better engagement from the investors. So this is the way we do. We help them develop their own impact management and measurement system or framework. In terms of, and that is what we do in Bolsa Social. In Fondo Bolsa Social, we do additional things, which is that not only we help the companies, the investees, develop their own impact measurement and management framework, but we also help them in the follow-up of the impact that they produce, and we help them understand the negative side of the impact. So we're always focusing on the positive side, positive impact, but what about the bias, right? The principal adverse impact in sustainability required by the Sustainable Finance Disclosure Regulation. We help them understand that side as well. We provide them with a platform where they can develop and put all the information required to have this information to understand the bias. And also in the fund, in Bolsa Social Fund, we ask the company to audit the impact, the annual impact that they report, which is an element that brings in more rigor and makes the whole impact management and measurement system more sound and robust. And we also link the variable salary of the CEO of the companies that we invest in to the achievement of the social impact goals that we have set at the beginning of the year, together with the budget of the annual budget. Right? So this is the way we try to help the companies understand, assess, and manage the impact.
Thank you, Jose. So we have 2 more questions from our audience. So maybe Florian, can you talk about the Ukrainian? What would you recommend a Ukrainian entrepreneur to get funding from for the business?
There are 2 things. As I understood the question, we are focusing here on refugees from the Ukraine being placed in EU countries. So in this respect, I think there are multiple different support programs, and I'm aware of. I can't unfortunately say too much about Poland because there we are not present. I know there are some funds on the Polish market providing funding to social businesses, but also multiple initiatives to support starting entrepreneurs in general, because I think the integration is a key topic. Obviously, I just talk about our experience now from Austria, because here, for instance, we have initiated an own program, which is also run by social banking, in order to offer financing for Ukrainian refugees to start their own business. So that works also in cooperation with the social ministry in Austria, where you're going through a regular screening program, where we are giving you the financing, and also afterwards there's some support program in order to help to develop these programs. Nevertheless, I think the challenge for Ukrainian refugees is, I think, a bit of a wider and a broader one. So I think that probably would be quite breaking the limits of this, but I think in a nutshell, there are, from a pure financial perspective, I think in most countries, some bank partners or financial partners that would support this. Also, there are army funds and other European support instruments that can be utilized, because I think what we see in general from the Ukrainian perspective, there you have very skilled migrants and refugees coming here, where there's a quite high likelihood that you will stay for a longer time. I think what is sometimes more the problem is also how to balance it from families, especially with younger mothers, to balance the challenge of having really the work managed and starting a business next to childcare, which is sometimes limited, especially in our region, what we have to say.
Okay, and Jose, can I ask you to answer the question about the role of cooperative banks or financial institutions on the side of social impact? If you have any views on that. And in the meantime, can I also ask Marcin, because we have only 4 minutes left, to share the last ball, so that we can also conclude the webinar on session. And Jose, there's a wish that you do a webinar on the topic of impact assessment and management. There's a lot to learn.
We can see that. We can see that if we will do another webinar. Happy to join. So on the role of the social the cooperative bank, the role of the cooperative banks of financial institutions on the side of the social impact. It's very few that I can say, but it's true that in Spain the cooperative banks. So we do have cooperative banks, mainly the rural banks, which are credit cooperatives or cooperatives of credit. I can see that they are willing to join this new world for them new world of impact investing. And because they by themselves, by definition, they are social impact companies, enterprise or endeavors. They were created to develop a rural area in a cooperative way. So what we have experienced from at least I can share my experience if it's useful, which is that for the fund, for Bolsa Social Fund, we have, as LPs, as investors of the fund, we have several credit cooperatives from Spain, rural banks with quite regional banks that are pretty much interested in entering this new space of impact investment through funds, because they already do banking finance, traditional banking finance in the social sector. But it's true that they are starting to test this investing through impact funds scheme, right? And so I think by doing this, they might be able to complement and the whole offer that they have in terms of social finance, right? Supplementing the financing part, the traditional banking financing part that they already have since decades, with this more new equity investment, impact investment through funds, so that they have a complete offer of social finance, right?
Perfect. It was a very, very nice concluding remarks, Jose, because we are exactly at 29. And we want the people leave on time for the next session. So it was very nice spending the last hour with you on the panel. Jose and Florian, thanks a lot for your time. And thank you for the audience for being with us, joining the discussion, and hopefully you took something away from the session. And I think if there's some follow-up questions, I'm sure that Florian and Jose are up there for discussions. And if you look for crowdfunding in Spain, you know where to go. Or if you look for bank loans in the CE region, you can reach out to Florian and see what makes most sense. Okay, then thanks a lot.
Thank you very much. Bye-bye.
Thanks a lot.
Enjoy the rest of the day. Thank you.